Hello. Okay.
Awesome. Great. Well, thank you guys all for showing up early, a few minutes. Good to see you all. And to kick things off, we're going to have everybody just give a slight introduction to Cam, so that way he understands who you are and then how long you've been in real estate, and he can get a clear picture of where everybody's at in their life cycle, their journey of real estate. And so yeah, just who you are, how long you've been in real estate, and we'll go from there. So I'll start with Spence.
Spencer Bassett, 2 years.
I'm Tim Hallmark, the second best student. I've been in real estate for just like 3 weeks about, but
Yeah, third best student. My name is Marcus Johnson. I just started like this week, so.
Nice. License this week or?
Yeah, well, this weekend I got my license, but Monday was like my first day. So
Sweet. Congrats.
Hi, my name is Sierra Gregory. I've been in the real estate business for about a week, like literally 7 days. But yeah, I'm excited.
Stetson Campbell. I've been in for like 2 weeks now, roughly 2.5 weeks.
So you've got a good range from 3 days to 2 years. So awesome. Guys, I'm excited to have you here for this session. And we're really going to be diving in one of the most important topics. And one of the reasons why you got into this industry, right, is being able to up-level your financial stability in life, your financial future. And so Cameron's going to go over your financial basics in helping you to understand more in depth what the real estate industry looks like from an income perspective and really how to set yourself up for success. So I'll pass over the time to Cameron.
Cool. Thanks, Joni. I'm very excited about this. We used to do an older version of Ignite that didn't even talk about money. Isn't that crazy? Who got into real estate because of the money? Let's be honest. Kind of everyone. You want to show houses and help people and do good, but you want to make a lot of money doing it, right? So that's what we're going to talk about today. But so a little bit about me. My info's over there. I'm Cameron Wilson. I work for the Red Sign team. I've been here for about 8 years. I always say I got into real estate through the back door. I got hired on to be, I feel like this is loud and close to me and echoey. I got hired to be, I don't even know what the job title was. I always thought I was bigger than I was. So I think they were thinking assistant. I thought I was running the company. It was probably somewhere in the middle. So I did not come licensed. I didn't plan on selling homes, and they got me licensed to do everything else but sell homes. So one of those things is the money, right? So I got my degree in business management. So I just wanted to manage and grow a business. That's my passion, like entrepreneurship, like how you can grow a business. Like I'm all about that, like obsessed. That's actually why I like doing these classes, is because it's my little way of helping everyone grow their businesses. So that's why I'm here. But so yeah, 8 years. Basically, my job now is I'm in charge of the money. I run the hub, as we call it. So kind of the front end marketing, and then the back end when things go under contract. So those are kind of my two worlds. And we have a marketer and a transaction coordinator, so I don't get too much in the weeds, but I am the money guy. That's probably my biggest thing, that if anyone wants to spend money on the team, they come to me. And if you know the team, Clay Winder, did he teach anything with this? A lot of times he'll teach. So he and Johnny Christensen, who is the regional director, they started the team together like 12 years ago or something. And so Clay actually can't spend money without me saying yes. And Johnny usually doesn't spend money without asking me or Clay. And so we're very tied in here with the money. The other reason that I wanted to really teach this class out of all of them, because I've done a bunch of these different ones. I like the database classes and all the things and like building your business and what you need to do. I wanted to talk about money because that's kind of my passion. Who's a Dave Ramsey fan out there? A couple of you. So you've probably heard of like the free spirit and the nerd when it comes to money. That's how he classifies two people, right? You have the people that are like, have the spreadsheets, have their budget, fill everything out, know where their money is going, worry about things. Who's the nerds in here? You can be honest. I got one nerd. Okay. In the middle, yeah, the free spirits, that's my wife. She's a free spirit. Like every month, she's like, tell me if I'm spending too much. And my answer is, you're spending too much, kind of a thing. So she gets her own credit card, her own account on a debit card. I call it the swiper account. And so literally she has like all of her money go to the swiper account. And so I can say swiper, no swiping for all you guys that remember the Dora the Explorer. So she's like, am I spending too much? I'm like, yes, you have no more money. You've spent it all. And she always has good reasons why she spent it. But so I am very much the nerd. She is the free spirit. And so we are going to talk on how to bring those two together, because I know that a lot of people are free spirits. So I have a very easy way to manage my financials, so my nerd doesn't take over and then I over budget everything and things like that. So it's kind of like a two-part way. On our team, we have, so mission and vision. Did you guys talk about these with Keller Williams, right? The mission is the these are the MVVBPs, right? Ooh, I'm saying way too many acronyms. I'm gonna get myself lost. So the mission, is it God, family, then business, equality for all? Something like that. Ooh, I should have written these down before I even tried to bring them up. And then the vision is, oh, where's Shoni? We got to restart this recording. I can't even remember our vision. Anyway, Red Sign team has a vision as well. So our mission, which is like client facing, is to help people build legacy wealth. We think the best way to do that is by real estate, right? I'm reading Rich Dad, Poor Dad right now. You know what he says? Build businesses, buy real estate. That's his advice. You don't need to read the book. That's all you need to do. Build businesses, buy real estate. It's got a lot of good info if you want deeper stuff for it.
He does have a really cool story about renting out comic books in a little library.
Yes, I love that story. Yeah, because he wasn't getting paid, so he started renting out old comic books and made a bunch of money. I wish I would have done stuff like that as a kid. Probably be better off. Anyway, so yeah, we think real estate's the way to go for the wealth. And then on our vision side, which is towards our team members, we want to build a pathway towards financial freedom, which probably means buy a bunch of rentals so you can have passive income so you don't have to work. It's kind of a backwards goal for our employees to not have to work for us, but so far no one's quit because of it. That's the goal though. So anyway, finances are huge for me. So you've probably seen this every single time. You've learned all of these things. What's the best thing you guys have learned so far? What do you like the most? Like what's like, I need to do that. It's going to change my world.
Negotiate was last time.
How was that one? Who did that one?
Because it was very clear on.
I like him a lot.
He specified some stuff and manage money though. If you're not going to manage your money, obviously nothing else.
Yeah, man, money is the most important part of this world, right? Probably not, but it seems like it.
I really liked the marketing one. I can't remember his name. It was a Latino guy. But he, I think he was just signing on with Keller Williams. He'd been at a different brokerage, signed on with Keller Williams. His marketing presentation, it was awesome.
Ooh, I'll have to find that. Yeah, usually I like sneak and talk to these people. Like I don't go to their classes. I like talk to them one day to get all of their little insights on things like that. It's like, hey, William. Oh, I don't know him yet.
Stelter.
Okay, I'll have to do that. Okay. Have you guys heard all these crazy stats of why small businesses fail?
No.
It's always because of the money. That's always the excuse. They either didn't make enough money or they mismanaged their money. I would throw real statistics out there, but I feel like even the real ones are made up. They're like 90% of businesses fail in the first year. And then after 5 years, another 90% of those 10% fail. I'm like, wait, the math ends up like 1% make it. You guys know your businesses, right? Have you guys learned this? Okay, you have your business. So our first goal is to successfully manage our money is the goal. So that's what we're going to do. We're going to run through a lot of things. I love questions. I'll ask you guys a whole bunch. Ask me all that you can. We can jump around these slides in any order that feels relevant in the book and things like that. But so, okay, here's kind of our goal, unless we jump around things. Perspective, we'll look at the models, the flow of money, build your future, best practices, daily success habits, and then recap. So here's the tips. Number one, and we'll go through all of these deeper, by the way. So you're going to set a profit goal that funds your big life and pursues the activities to achieve it. So imagine this. Imagine you had $10 million. What does your life look like if you just like won the lottery or something? $10 million. What do you do? Save money? No, you won the lottery. You're not allowed to do that. That's what everyone says. You don't save your lottery winnings. Okay, let me change it then. You make $1 million a year passive income. You don't have to wake up and you make $1 million a year. What do? Travel, family, no more debt. Yeah. Yeah, that happens before all. Yeah, it would be awesome to tomorrow just make $1 million passively. It's like, what did I do last night?
I was just gonna say, with taxes, a lot of people spend their money to save their money
Mhm.
so that it's deferrable.
For your tax. Ooh, smart. Financial. Make sure you're keeping all of that money. So really the whole thing is if you don't really have a big reason, a big why on why you do things, like it doesn't really matter. Right? Have you guys watched, I've talked about this like every day for like 2 weeks. There's like these two, I think they're brothers. I don't know, maybe they're just friends on YouTube that like dig out the pools with the sticks. Have you guys seen this on YouTube? Most people have seen this. You should, they're builders in some random country that build these like huts and pools with sticks. And it is the most incredible thing. They're like 20 minutes long. There's like 20 million views on each of their videos. And they build like these stupid little pools in the wilderness. And it's awesome. And they seem very happy just digging all day long. And so I feel like none of us are happy in our lives and we have all of these things. So I feel like we need a big purpose. Like, what is driving us forward? Why are we even doing anything? Like, could we be happy making $30,000 a year? Probably not, but maybe. Like, who knows? Like, what's your life like? Do you need 100,000? Do you need $1 million? Like, if I'm like $1 million passive and you guys like, I don't even know how I'd spend that. Like, what's your big why? Like, that's what you need to figure out. Why am I doing all of these things? And then the next goal is to fund all of that passively. But first you have to work for it. So what's your big why? How do you earn that? Estimate, save for, and pay your taxes. Tim's got that one on his mind. We're going to talk about models, proven system. If you realize everything in Keller Williams has a model and a system. Do you guys know the difference from models and systems? Because we'll talk about them a whole ton. And I didn't even really understand the difference. So the model is like an outline of how you should do it. The system is actually doing it. Yep. Yeah. One's the map, one's the GPS, I guess we could say it. Like, yeah, if you handed me a paper map and dropped me in the wilderness, I have no idea how to go anywhere, but you stick me in there with the map and a GPS, then we're talking. So that's the idea. We're going to give you both. Talk about be financially savvy, reviewing your financials, pay yourself a salary, and prepare now for a financially secure future. Things. Money is good for the good it can do. Does anyone have a problem with making a lot of money? Like, let's say this year is just ridiculous and you make $500,000 after taxes, after your expenses, like to your pocket. Would you feel bad about that? Some people say yes. And so I just want to make sure that everyone's on the same board, that money is good for the good it can do. We can take this money and we can go build a school or something. By the way, coming in May, Red Day, every Keller Williams shuts down to do some good in the community. Make sure you pay attention in team meetings because you guys should all join it because we are going to take our money and do something good with it. So, okay. So we have 2 examples here. I think they said this is in the book. I don't know because I don't have the whole book, but if you guys want to read it, we can just talk about it. So let's talk about this left side first, because this, by the way, this class, you guys are like all newer in real estate. I'm pretty sure I could teach this exact same class to someone that's been in the business for 5+ years and they would learn a lot from it. So you guys are going to jump ahead of everyone. Okay, so let's talk about this, this first thing. This is what everyone thinks, and I want to make sure that you don't do this. Probably gave it away. This is the not do it side. So you sell a house, $300,000 at 3%. You are so happy. Brokerage gets $9,000 in. Then they take out your split. So you get a check for $5,760. What do you do with that money? You don't do anything but spend it. You got to spend money to lose money. Is that the same? I made that up. So that goes into your personal bank account where there's nothing that you save for your business. And then it goes into your wallet. So there's no saving. And what happens when money's in your wallet? You swipe it. Just like my wife, swipe or no swiping, just all of it's gone. It's funny. If you ever meet my wife, don't tell her this, but I secretly take money out of her account and put it in a savings account. And I don't tell her this. I tell her that there's another saving account that I'm taking some money and saving it, but I actually like randomly will take money and put it in that. And then the other day she's like, oh, how much do I have in that? I'm like, oh, you have $1,200. She's like, oh, good. I wanted to buy a couch. I was like, perfect. She's like, I saved that money so fast. And I was like, yes, you did. But her life was the exact same. She had no idea that I've been taking money from her to save it for her. And she was so happy about it. But then she spent it on a couch. That's where we differ. We have 4 kids. We don't need a nice couch. We need a crappy couch. So this is a bad example. So, and they even call it out here, business savings. What have you guys spent so far in real estate on your businesses? Licensing, school, what else? Brokerage fees. What else were you saying? Board. Yeah, running a business is expensive. No one even mentioned marketing. Anyone want to throw an event? We just did an Easter egg hunt, cost us $11,000. Yeah, it was 20,000 eggs and food trucks and tons of giveaways. So it was awesome, but it was $11,000.
And you manage and oversee these?
Yep, I'm the one that makes sure it happens. So I know I'm in this funny part of my career where everything, if it goes wrong, it's my fault, but I have people that help me with everything. One day I want it to be like where I'm like pointing at them, like, it's your fault that it's wrong. Like, you suck, you're fired. I don't think I'd do that. I'm too nice. So that's a bad example. Here's the good example. So you sell 9,000, you get a check for 5,760. By the way, I'm not sure the split on this. This is just their numbers, so might be similar to us. 9,000 is pretty similar to what an average commission is right now. It goes into your bank account. And then you also give yourself some money for your personal bank account that goes down to your tax savings for federal and self-employment. And then you end up with a chunk of change in your wallet. I have a different way to run it and that I'll show you later, but that's the whole concept. So then what happens when your dues are, when you're 2 years in, need to get licensed? Did you just do that or are you about to do it? You renew it. I just had to do mine a couple months ago for my 8 year. And it's like $1,000 or whatever. Maybe it wasn't.
Well, mine for 2 years was something like $60.
$60? Oh, just for that. Oh, and then you have to do, it's every year for the board, right?
Yeah, are you talking about UCAR?
Yeah,
UCAR is about
900. Boom, one deal, you already have more than that. You guys want to do marketing? You want to take some friends out to lunch so they give you some referrals? You want to buy yourself a new laptop? I got $1,700 for you there. All business expenses, which means they're write-offs, which we'll talk about a little bit in a minute too, which they don't call out too much here because it's taxes, but.
Is there like a certain percentage?
Yes and no. You know what? Let's jump ahead. Let me draw you my diagram. So here's how I think money should work. So you should set up 4 accounts. I don't know how I want to do this. Boxes, I guess. You guys ever read the book Profit First? This is exactly from the book. If you haven't read it, it's super easy read and really fun. I like the author a lot. So your first one is called income. Every single penny that you get goes into this. By the way, this is how I run my personal life. My wife makes fun of me for having so many bank accounts, but this is how my mind works. So I'm like, I do it for business, let's do it for personal. So income. Then you have your expenses, or he calls it the operating account. Ooh, operations, I just put. I don't know why I'm fixing it. You guys can't read this writing anyway. Operating. We have a tax account and we have a profit account. So this is how he says that he would run everything. You sell a $9,000 house, your cap comes out, all of the money dumps into income. Then twice a month, you take whatever money is in income and then you split it out completely into the 3 other accounts. So if there's $0 in your income account, that's fine, because we're not going to spend any money. The 3 monies that get spent are either your business operating expenses, your taxes, and your profit. You pay yourself a salary from your operating account and then spend all of your business expenses. By the way, you should talk to an accountant about all of this, by the way, but every time that I eat, it's a business expense. If I go to a restaurant, I'm going to swipe it with my business card, which we'll talk about having a business entity. I feel justified for that because I feel like I'm always doing business. I went to lunch just before this. I went with an agent on my team, and so we talked real estate. Boom, business expense. I take my wife out. She says, "How was your day?" I say, "It was good." Real estate. Boom, business expense. I'm not sure how the government would look at all of this, but I'm banking that they don't. Your accountant might be okay with all of this too. So double check with him, but I have crazy amounts of business expenses that could probably double for a personal expense. My cell phone, for example, my business pays for it. My car, my business pays for it. Like as many things as I can justify for my real estate world, I have my business pay for it.
So you write off your first cell phone business.
Yes. I feel like I could get in trouble for that one though. Because they'll say, well, you would have a phone if you weren't in real estate, right? And you call your mom. So like maybe they just take a percentage, like, oh, 60% of your calls are real estate. But it's like, I talked to my mom about real estate last time I talked to her because my sister wants to buy a house. So even I'm talking to my mom about real estate, business expense. So I don't know, I'd probably fight with an auditor about that.
My uncle's an accountant. I talked to him a little bit about this, and he did say to write off like any phone expenses. So I wonder if I could like write off his personal phone.
Yeah, every year I buy myself a brand new phone because I'm a tech guy. And so, boom, my Apple Watch, my business bought this because I get notifications of what's going on in my business. Right? Oh, I got an email, offer accepted, boom, business expense. I've heard about people, I'm just starting to do this, but I'm kind of nervous about this. Netflix as a business expense, right? You meet with some buyers that have some kids, you grab your iPad that your business bought and you turn on Netflix, boom, business expense. I don't know about that one. Spotify, like I didn't have music playing before this, but if I did, that's a business expense to have Spotify. So you can get pretty creative, double check with your CPA. I'm not gonna go crazy on that, but just know. By the way, this is all your money too. People get all into write-offs, like let's write this off, let's write this off. But it is still your money, right? The write-off is to help your taxes, but you're still spending the money. So don't spend money just to get a write-off. Yes. Yes. I am all about QuickBooks. Yep. So I have all 4 of these accounts connected to QuickBooks. Mm-hmm. And so then I can see that my money's going out and going into all of these. And so on QuickBooks, like if you click on banking, it will have like 4 little bank accounts and you can organize all of the things. I've tried to do QuickBooks for my personal life because I like it so much. So there's probably like FreshBooks I hear is another good one, but I don't know because I'm all about QuickBooks. It's also like $20 or $40 a month, so it gets pricey. So anyway, so okay, you make money. A certain percentage should go to your expenses. I actually break his rule and I just do a fixed number here because I know about what it costs me to run my business every single month. And so I put that much money in my operating account. Whatever you make, you should have a percentage go into your tax account. This is where you really want to talk to your CPA. Like, I'm gonna make this much this year. How much should I be withholding for taxes and stuff? Boom, put in your tax account. This profit account is awesome. And there's a slide, maybe it's the next one, that we'll talk about this. Look at us jump around. So yeah, so what most people see is money comes in, money goes out, whatever's left is profit. This whole concept changes that idea. So it says, what money are we going to put into our profit account? And then we have expenses. So how much money do we need to make? So it's kind of like flipping the formula on its head. It kind of just changes your mindset. So a good example of this, so Johnny and Clay, right? They own the team together. They're business partners, so they split everything. Johnny doesn't really sell real estate. He is a leader person. He is great at leader. That's why he's a regional director over Keller Williams. Like, he took Tim's job. He was the Tim before Tim, the CEO here, and then he went above him. So he runs the 8 branches or whatever we have of Keller Williams in the state. So anyway, he's a leader. He doesn't sell real estate. Clay sold real estate. He is a sales machine. If you ever get a chance to listen to him on how he does real estate, for sure go to that class because it is amazing. He's been doing it for 12, 15 years and he is good at it. Anyway, so when he sold a house, they would do something like this. They didn't have the same names because it was before that. They were saving for their investments, their taxes, their business expenses, and then they'd have profit. He was trying to convince me when I first started that every house he sells, he only makes 10% of the income. So do you know what he did? He closed a lot of houses because he thought he only made 10%. So he had to close way more houses. But what he didn't realize is that all of that money paid for his taxes. And then they also saved for investment properties and bought a whole bunch of investment properties. So that's kind of how they did it. But in his mind, he had this. He knew his goal for profit and that he would only get 10% of every closing. So he had to close way more. So make sure we're not skipping things. I'm behind on my papers. I'm real bad at the slideshow. So you guys can call me out if we're ever way off your book. So anyway, let's get on this a little bit and we'll keep coming back to this. So the whole model of Keller Williams, you'll probably hear this a lot. It's called 30-30-40, right? So obviously money comes in 100%. Then there's 2 sorts of expenses, cost of sale and operating. We'll talk more about these. They should each be 30%. So your profit should be 40%. So whatever you close a deal, you should get 40% of that. So like obviously 10 grand, you would get 4 grand. And that ends up accounting for everything else in the world that you need to spend money on. The cool thing about this is this scales up with you. It's hard to stay with this 30-30-40 kind of idea. It's real easy here because if I told you guys, I'm giving you $3,000 every time you close a deal to pay for your business, like what would you even do? You close 10 deals this year and you have 30 grand for business, not the 40 grand that you're living off of, but another 30 grand of business expenses. Like it's just a whole different thing. By the way, your taxes are already paid for, they're saved, you have everything else. This is just spend on your business. Hard to do. Well, it's easy to do, but it should be hard. Anyway, so that's our thing. But first we need to know the goal. Did I skip that? I feel like I skipped the goal. Yeah. It's Mike Motorbike is what he calls himself because it's a really hard last name. Mike McCallowitz or something like that. I think if you Google Mike motorbike, it will come up. But yeah, he's got profit first and then fix this next. They're both really good. Okay, well, we'll set our goals in a minute because I think that's coming up. Anyway, so income. There's 4 ways that you can make money in real estate. You sell a listing, you help someone buy a listing, you refer business out. Anyone not from Utah? Look at that. Where are you guys from? Sacramento? Guam. Oh, that's cool. Hawaii. Ooh, which island? Oh, nice. My family lived in Maui. No, my aunt and cousins and stuff. So yeah. So I've been to Maui a whole bunch. So in these places, they sell real estate. I'm assuming Guam. I don't know enough about Guam, but their territory, it has to be similar, right? So if you have someone that wants to buy real estate somewhere else, it doesn't have to be where you're from, and you send an agent the name and phone number and say, contact this person, most agents will pay 25% of their commission to you as a referral fee. Best deal ever. It's the easiest money you'll ever make is by knowing someone that wants to buy or sell a house and then not do any of the work. It's crazy. Love it. But anyway, referral income. This last one, I should almost group it in its own little category, leasing income. This is rental properties. We don't make money in Utah by helping someone rent a property. There is property management. We have one here in our brokerage, but you're not allowed to sell real estate and do property management. So you kind of got to choose one. If you're interested in property management, come find me. I'm very involved with that, but that last one's probably not going to happen. So really those 3, sell houses or have people. By the way, the common denominator in these 3 things is talking to people. If you don't talk to enough people, you're not going to find out that they want to buy, sell, or buy or sell somewhere where you're not. So talk to people. Okay, cost of sales. Without looking, does anyone know what a cost of sale is? Who's my accounting nerds? No one? Okay, so cost of sale, I don't know how they put it. It's something that you spend because you made a sale, right? So for example, the Keller Williams split that we have. If you close 0 deals, do you know how much you pay in your split? Trying to do a trick question. 0. You don't pay anything, right? Yeah. I saw you all thinking that it was going to be 0, but you thought I was tricking you too much. It's 0. If you sell 100 deals though, how much will you pay? There's a cap. You pay all the way up. So technically it's a cost of sale, even though it stops. A transaction fee, right? If you hire Jen Gray to do your transactions and she charges 200, 300, 400, I don't even know what she charges. It's a percent. Okay. Our team charges $400 and 50%. So we're probably way more expensive than that. But anyway, so for an agent on our team, one of their cost of sales is $400 every time they close, unless they collect it in the buyer broker, which is a whole nother conversation that you guys should all do if you have to pay. Yeah, so it technically is a cost of sale, the split. Yeah, so wait for it, no, back to the board. So how it works is, so if you close like a $10,000 deal, you're not taxed on this full $10,000 because you have a split with the brokerage. So what is it, 30%? You're on the weird thing for now. Weird, it's not weird now. 50% now, and then later for the first 4, okay. And then it becomes a 30% unless you stay on a team, and then it changes. There's a lot of change. Anyway, so if it's 50%, so then $5,000 goes out as a cost of sale. And so you're left with $5,000. That's what you would be taxed on, unless you run it through your business and then you have all of these expenses that are like tax write-offs. Like half of your meals can be written off and stuff like that. So that's why people are like, oh, I need to spend this money or I'm going to be taxed on it. Like, let me buy you a gift. But I think that's dumb because you're giving your money away either way. But if you keep that money, then you look better for a loan. So don't just spend money to have tax write-offs. Yeah. So anytime that you have some sort of expense that's only there because you close a deal, that is a cost of sale. And really the big ones are splits, transaction fees, referral fees, or something like that. They only call out those four. So let's look at it. We kind of talked about this. So the two big ones are there's a brokerage cost of sale, and then there's a Keller Williams international cap, right? And you can cap on both of those. So like you do your GCI minus your brokerage cap, and your Keller Williams international gets you your net commission. But then if you cap on one or the other, when you've capped them both, you keep the whole thing. Does anyone have questions on caps? We just went right through that real quick, but I feel like that's something that's talked about more often. Okay. If you have questions, find Shoni, me, Molly, Colton, the new guy might be able to answer some stuff. Okay, let's build your future. Plan for your future. We are going to actually do this, but I'm a group worker, so I want everyone to work together. I mean, separately, but together. We can talk aloud. So we are going to write down numbers on how much money you want to make. Let's talk about 2021 because we're still fairly early in it, right? April. If you've had any closings up until now, include those. How much money do you want to make to your pocket after taxes, after splits, after everything? And write that down somewhere. We'll do math together. By the way, don't go too crazy on this. I mean, you can later, but like, what do you think is realistic? Like, don't say $1 million. That's probably not realistic. I don't know. Maybe you have a bunch of really rich friends that are going to buy multi-million-dollar houses, and you'll get like 10 commissions that are ridiculous. I don't know. That's doable. Okay, so first, so in this example, they said $100,000. It seems like everyone says that, right? Does your number seem like it's going to be $100,000 for the year? Is that what everyone puts? Yeah, if you put that, you can cheat. Boom. Okay, so first of all, they're assuming that your 40% are going to go out to taxes. Again, talk to your accountant about this. I don't know. Some people save 30, some people save 20 and then owe more later. Always save for taxes, because otherwise you're just going to owe taxes and you're going to be like, oh crap, I need to close deals to do taxes. But so do 60%, divide that by 60%. So that's how much money you need to make to cover taxes. 166,000. So then if we are on this 30-30-40 model where 40% of our income is profitability, we would divide that by 40. So that's how much we would have to make in gross commission income. I like they skipped this step. What's 166 divided by 40? I should be doing math with you guys. Okay, so that's right. Okay. So total commission would need to be $416,000. So then we do our average commission. And so they said their average commission is 7,500. I think we're like 8,800 in the brokerage. So use whatever. If you have a bunch of bougie friends, like maybe you're 10, 20 grand. If you are young and only have first time home buyers, you're probably closer to this 7,500. But so
we take what our goal is and divide it by 60.
Yeah, divide it by, yeah, so whatever this number came out with. So yeah, to divide by 60% first. So it's 166. So that's accounting for taxes. Then divide that by 40. And so that's how much total GCI, gross commission income, you'd need to make. And so then divide that by the average commission. And that tells you how many houses you would need to sell. Remember, this top number is money to your pocket. So like we talked about, if we're paying for our cell phone bills out of our business, our laptops, our car, everything like that, this number is after that. So it's like you'd have $100,000 with no car payment, no cell phone. I don't know, maybe you could write your home internet off, ask your accountant about that. But so your half your meals, your expenses look very different is what I'm saying. Because when a lot of people think I need to sell 56 houses to make 100 grand, it's like, well, yeah, but you don't really have a lot of other expenses. So this is a crazy good income because you also have 30% of this number that goes to business expenses. What is 30% of that number? 6 times. Oops. Yeah, you have $125,000 that go to expenses in your business. So you can have an awesome life is what I'm saying. It's just business expenses. So that's where the 56 sounds big, but it's actually doable. Then you have your cost of sale. So royalty plus cap, I think this 6%. Nope, that would be the full cap because they're assuming you're going to cap. So in this example, they're saying that's $18,000 plus 6. No, why can't I do math? 17,000 plus 6,000. Keller Williams International is always 6,000. The brokerage, the most you'll do is 15,000. So ours would actually be 21 if you're not on a team or anything like that. The highest you'd ever do. So your operating expenses, like I said, you get $125,000 to spend on your business. You've already saved for taxes, and you have 100 grand left in your pocket at the end of the day. Like pure, just spend on whatever you want, your house, your vacations, your whatever. So most people, when they're looking at this and they start to think like, what would I spend $125,000 in my business on? Like you could cut your top number line probably in half because most people lump those together. So run through this a few times, like on your own, like how many do I really need to do? Like what does it take to fund the fun in my life or my big mission? And then what if my business was all accounted for and taxes? So, okay, let's talk some of these best practices. I got lots of info on this. How are we doing on time? Okay. We kind of talked about this. Gain clarity on your big life hopes and dreams. Is that all it says? I think that's all it says. Like I said, if you don't know why you're doing this, you'll probably get burnt out. Sometimes real estate sucks. You get very excited for things and then things go very wrong. You guys want to hear my craziest one that I'm going through right now? So I have this friend, he was my roommate, semi-roommate. He was my roommate's friend that slept on our couch for like 3 months. Anyway, now he's my friend. He got a divorce and needs to move out. So I call him every quarter because I'm a good real estate agent, but I didn't know he was getting a divorce. I left him a message. Like 3 days later, I run into him at my son's soccer game. He's just like driving through a park. And I was like, what's this guy doing? Just like driving in a park all by himself. Ends up, he was looking to move to the area. He was driving around because he just got a divorce. He needed to move. And I was like, chatted with him. I was like, oh, hey, who's your agent? And he's like, no one. I was like, okay, me. He's like, sweet, I want to buy that house over there. And I was like, done, let's do it. So he put in an offer. Obviously the market's crazy. So they got like 4 offers. I knew the other agent. And so I called him up and I was like, what do we need to do to win? And he's like, do this, 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 and this. It's like, done, we'd do it all. So we sent him the offer, doing everything that he wants. He's like, sweet, because your earnest money is going to go hard, I'm going to send you the seller disclosures so you're not worried when you go into it. I'm like, you're such a nice guy. I like you. So then he sends us the seller disclosures. I forward them over to my client. The second that I do that, the agent calls me back and he's like, just kidding. We're not going to accept your offer. We got an offer exactly the same as yours, but $25,000 more. I'm like, dang it. There's nothing we can do that. He was at the max of his budget. I was like, no, we can't do it. So they ran through it. And now, just yesterday, he calls me. He's like, hey, those people canceled. You still want to do it? I'm like, yes, I do. We'll send you the offer over now. So hopefully after this class, I have an accepted Rep C.
So after the sellers accept an offer, you have to resubmit an offer.
Well, depending on it. So you can do a backup offer and they literally sign that they accept your offer. if the first one cancels. That would be the best thing you could ever do in this market. I don't think a single seller would, especially if it's like a month later, home prices have probably gone up, so they'll get more for the house. But the sellers have a weird divorce situation where they have to sell, and we can close really super fast because we're using First Colony upstairs and they're awesome. And so they like our offer the best and we're super fast. So it doesn't make sense for them to go back on the market and take all the time because they need the tight deadlines. So,
This other agent disclosed to you that they were getting divorced.
Yep.
Which expedited the situation.
Which-
was real helpful.
yep. So the more you can get from agents. So anyway, I'm saying that because like I met a guy in a park and we're buying a house the next day. We're thinking we're winning. I'm like, I did zero work. Real estate is awesome. I don't know what everyone else is saying because it's so easy to sell a house. And then literally the next day it's like, he's like, maybe I won't buy this year. I'm like, dang it, no. And then I'm back on it now. Like, yes, we're going to go under contract. This is so easy. And so we'll see what ends up happening. Anyway, if you don't have the clarity, you're going to go all over with your emotions. But if you have the clarity of like, one day I am going to be doing this, or all this extra income, I could do my big life's mission, and it will keep you driving down that path. And then it helps you kind of guide, right? Because in real estate, there's a bunch of different paths. You can just be a solo agent and make a ton of money all by yourself. You can be on a team and have a support of everyone and make a bunch of money. Or you can go create your own team and make a bunch of money. Or you can make no money as all three of those. There's always that. So if you know why you are doing it, it's going to help you in those hard times. And when you don't want to make the phone calls or door knock or do the open house, all of that. You're like, why am I going to show homes on a Friday night to someone that's probably not going to buy them? Because of your big why. Maybe they'll buy it. Set up your personal and business budgets. So we didn't talk about this, but everything should have a budget. Does anyone have a budget? Yes, we got a few people. How well do you live your budgets? Okay. So you have to be. So my wife is very bad at the budgets, so it causes me to be, I just don't spend money because my wife spends all the money. But then that causes her to feel like she needs to spend money for me. So she'll be like, well, you haven't bought clothes in like 6 months. I'm like, yeah, all my stuff is fine. It still fits. And she's like, okay, well, I'll go buy you some new stuff. I'm like, no. But so she spends all the money because I don't. So randomly I'll like spend all this money. So then she feels like she can't spend money. Awful for a budget, but you should have a budget. So my new thing is conscious spending. This is like the poor man's budget. I guess that's bad wording. The lazy man's budget. It's like you choose the things that you'll spend money on and the things that you won't spend money on. For example, me and cars, I'm not a car guy. My requirement for a car, because I just bought a car this last year, I needed it to have adaptive cruise control. You know that where you're like in cruise control and the car in front of you slows down, it slows down for you. That was my only requirement. I needed that. And so that's all my car has. So I got the cheapest car that would do that. Toyota Corolla. I only shop Toyota because I like them as a business. I don't know cars, I know businesses. Toyota's a great business. So anyway, that's my budget, but everything should have a budget, right? And then figure out how to do best in that. Like I told you guys, our budget for our Easter egg hunt that we just did was $11,000. We actually had a bunch of our vendors sponsor it. So we didn't, well, I mean, we spent $11,000, but we're going to get most of it back to us. Plus we're going to get a bunch of closings. So it will end up being better for us in the long run. How to track a business. So I am big into spreadsheets. Even though I use QuickBooks and all these different accounts and things like that, I use Mint in my personal life. At the end of every month, I put all of that in a spreadsheet. Like, because I want it to do other things that Mint doesn't do. I want to know, like, over this time period, what did I spend in these categories and how have I changed in each of them? And I don't do that in Mint, so I have to do it in the spreadsheet. Anyway, so I do it all with spreadsheets. And then there's like, you should do a budget and you should do the actual to see how you did, because sometimes you're just wrong. Like some people are like, I could live off of $4,000 easy. And I'm like, your house payment's $2,000. You and your wife both have financed cars. Like, I'm pretty sure the debt I just added up equals $4,000. Like, how do you live off of that? Like, you're not thinking of it. And so if you write down your budget and then your actuals, you can start to get an idea of where you're spending. But I would like that 30, 30, 40 kind of concept, is like 30% of your Okay. Yeah, but so I would try to figure out. And part of the thing that I do, this is working right. Okay. Part of the thing I do in Mint is like, that's just my personal life. I need my business life, but it's all my money when it comes down to it, right? So I want to make sure that I'm correctly spending all the money and not just like my personal budget or my business budget, like the whole thing. And so that's why everything ends up in a spreadsheet. It's the easy answer. Set up your business entity. Does anyone have a business entity? Yeah, like an LLC or S Corp or anything. Okay. Again, talk to a professional. We'll keep it on this side. So here's what your world should look like. There's this awesome accountant / attorney named Mark Kohler. I think Kohler spelled like the sinks or whatever those plumbing is. Is that a thing? You know? Oh yeah, he's great. Watches. Does your friend do the videos for him? I can't remember. All I know is that he says that he pays one of his kids to film his videos that he puts online. Is that who does it? Yeah, I don't know who it is. Uh-huh. Yeah. Yeah, that's funny. Anyway, he's got good stuff. Listen to him. So he says that your business world should look, oh, this is not a good drawing. It's not supposed to be a face. So there's two sides of the world. One is the business side and the other is the asset side. We'll turn this one into a house. So when you start investing, your rental property should be over here as LLCs, right? Whether that's one for one property or all of them in the same, that's a whole other debate. But just as you buy rentals, they're on one side. The other side is a business entity. So all of your money dumps in. So that's where these accounts are that would dump in to your S Corp. An S Corp. Yes. No legal advice here. So what my accountant says is create an LLC and then do the S election to turn it into an S Corp. Yeah. Yeah. Taxes at LLC, but you're an S corporation. Safety net is the LLC, but you taxed as an S Corp. Because what that lets you do is pay yourself a salary and dividends. And your salary obviously has like the normal taxes, like when you're an employee and you look at your paycheck and you're like, I thought I was making $5,000 and I only got $2,000 deposited. Like, what went wrong? All of those taxes get taken out, but you can also distribute straight to you, which you have self-employment tax on. So anyway, down here is you. And so you end up with your business income flowing down and your rental property income flowing down. If you want to get real complicated, this should actually be a trust, and then that should flow to you. Anyway, we won't. But so you should have an S Corp. Kind of like the line in the sand is if you are going to make 30 grand or more in a year, that's when it makes sense tax-wise to have an S Corp. Before that, there's not enough benefits to do it. So kind of look at your life. If you're going to make 30 grand or more, 100% do this because you will save money on taxes. If you're not, I still like it because it has a separation in your mind, right? I'm swiping my business card because this is a business expense. This is a personal expense. I'm swiping my personal card, those things. And so it's a very clear distinction in your mind, which makes life way easier for budgeting and things.
So I'm setting up my LLC right now. How do I go from being an LLC to an S?
You ask an accountant or a lawyer. I have not done mine in like 8 years. Do you know how to do it quickly?
There's a document, I don't know what it's called, CPA does, but you're just electing to be, it's an election document, but I don't know what the specific name of it is. So everyone asks.
I did it all on my own, just Googling, and no one says it's bad yet. So I guess I did it right. I know a lot of people that have done like legal Zoom and things like that. Or if you know an accountant CPA, they can help you out a whole bunch. If you already have an accountant, you could do a lot of this and then ask them, hey, what's that form to make me an S Corp? And they'll tell you, oh, it's form 98B C3R, whatever. I don't know.
Okay, that'll work great.
Cool. Yeah. Thanks, Shirley. Gosh, he's good at his job, right? If his job's being an assistant to the speaker, I guess. Thanks. So set up a business entity. Like I said, I really like this just for the mindset of it, but there are a ton of tax benefits at 30 grand and more. So, but then you have to like renew things every year. You have to actually be organized with it a little bit. Open additional bank accounts for taxes, expenses, and other savings. Boom. Oh, I never finished this. Let me come back to my little drawing here. So we have our income account, right? We figure out what it costs to operate our business and we say we put that much in the operating account. Same with taxes, whatever we're going to save for taxes, and then profit. You should start with a profit number, right? We did that profit and then work the rest backwards. So you know how much you should put in all of those. The profit account, what this Mike Michalowicz says that you should do is every quarter you take half of whatever is in that account and you pay it to yourself. Boom. That money is yours. Spend it on whatever you want. It goes personal, right? So let's say you have a really good quarter and you have like 20 grand in here. You just give yourself a 10 grand bonus for being the owner of your business. Then let's say the next month you don't make any money. You still have 10 grand in here. Boom, you give yourself a 5 grand bonus because it was a tough quarter. And then you just keep working. The whole time this operating expense should be paying your salary. So you should get a salary, which is, oh, it's not one. It was, oh, it was on the beginning of all those steps. My goodness. Oh, nope. There it is. It doesn't like there. Can't stand by the board. So, yeah, your operating account is paying your salary. Your taxes are already there for taxes, so you don't have to save that. By the way, at the end of the year, like April 15th or May 15th this year, you pay your taxes and money's left over. Do you know what you do with that money? Bonus, you got a tax return. It's basically what the government's doing anyway. You overpaid your taxes, and so they're cutting you a check back. You're doing that same thing, except for you control the account. So you have it already saved. If there's extra, it's like a tax refund.
So your operating expenses.
Yep.
You're not just talking.
No, it would be business, yeah. So then I actually set this up in my life. So then my life goes income, expenses. I don't save for taxes in that, but I have another savings account. And I don't have a profit account. I had that for a while, but it was all kind of saving. This is like business. I don't even know what I write words sometimes. Personal. And so then my operating account dumps into my income for my salary. The profit, I get half of that dumps into my income. And then it does the same thing where it flows down.
Okay, yeah, that was kind of my question. So like operating expenses, obviously that's still like business expenses. $1,000, but included that is like your rent or your house payment or whatever.
Yeah, whatever you justify as a business expense, I would do that. Whatever you can't, it has to be a personal expense. So like paying your rent or your mortgage, that is a personal expense, so you have to do that.
So that money that you're like, paying your mortgage, you're just saying that's your salary, like your business salary.
Mm-hmm.
And then there's a tax advantage on it.
Yeah, so it's like, and accountants are really good at this, but there's a certain percentage that you should pay yourself as a salary compared to a distribution, which is this, that's what this one's called. And everyone's different. Some people think it should be, some people think that it should be like 30% salary, percent distributions. So whatever your accountant's telling you is probably the right thing because they're figuring out your taxes as well. So I'd for sure listen to them. Home office expense and yeah. So listen to this hack that my accountant just told me about that I wish I would have known years ago. So you can technically rent out your house for a corporation or company to have like a monthly meeting, a board meeting, something like that, a retreat, some type of event, and you can charge them whatever is fair, right? So the Marriott charges $1,000 to do something like this. So technically you can charge your business $1,000 to have a monthly meeting at your home with your board members, which could just be you and your dog, right? And so then you can't do your home office deduction, but it's a different type of home office deduction, but it's another way to do that. So again, talk to your accountant. There's a lot of things that you can do this, but just make sure you're going to be legal.
Have you personally tracked it with mileage? I know that that's also a tax write-off.
Yes.
You don't do it by miles, right?
By miles. So there's two different types of deductions. One is the mileage deduction. So you literally say, I drove this many miles and you get like, I don't know, 52 cents every mile deducted off your taxes. The other is actual. So it's like, my car cost me this much money last year. If you guys are showing houses, 100% of the time, it's going to be the mileage will work out to your benefit. There's apps that you can get on your phone, like Mileage IQ is the one that I hear a bunch of people use, that just like, you just leave it on when you drive, it tells you, it says, was this a business or personal? And you just click business and it tracks all of those mileage for you. So it's pretty, the other thing that I've heard people do, which I do not recommend this, but they literally have a little notebook in their car. They take it out and on January 1st, they write what the mileage is. And then they figure about 90% of the time I'm driving for business. And then at the end of the year, they figure out what's the difference and what's 90%. Don't do that. I don't think the IRS would be okay with that. But if you have the Mileage IQ, you just be like, look, this is all the business miles as a log. And they'll be like, okay, I believe you. Yeah. I tried doing the notebook thing for a while where I'd actually write things down because I wasn't driving all over the place all the time. So I would like write down, like, I went from my house to this place and then this place to that place. And then all of a sudden 3 months in, I was like, oh shoot, I forgot that one time that I drove a whole bunch. What was that? I'm like, I don't even know. And so now, because I don't drive showing houses enough, I do the actual. So it's like your lease or car payment minus whatever you take to fix it and gas and everything. And so that works out in my benefit. But if you're driving showing houses, it won't be better because you'll spend more money on all that. So that's how I do it. Okay. Download and use the MREA chart of accounts. So Keller Williams tries to give you all these resources, right? We talk about models and tools. 30-30-40 is the model. The tools, they have this chart of accounts. I think if you go to kellerinc.com and then click on the Millionaire Real Estate Agent book, you can download the chart of accounts. This is if you don't want to do QuickBooks or you're setting up your own QuickBooks, download this. If you're not going to do QuickBooks and you're going to do like a Google spreadsheet or something like that, which is probably not the best, but it's better than nothing, that will have all of the expenses categorized in the right places, and your accountant will love you at the end of the year. They're like, this is so easy on me because everything's organized and great. So that's what the chart of accounts are. But the next thing it says is download or purchase accounting software. Like I said, I love QuickBooks. I'm all about that. You do have to pay a subscription fee for it. It comes out of your business expenses, which sounds great unless you haven't sold a house yet, and then that sucks. So maybe wait till you sell a house to do all of that. Did you have Keller Inc? Yeah, like INK, like a pen. And then in under Millionaire Real Estate Agent, should have that. Hire an accountant, CPA, attorney. This is a big one. Make sure you have someone that will help you. If you have someone like your best friend's dad is an awesome accountant that I quote here, then for sure use them. If not, the other options are, if you know Novalee, do you guys know Novalee? She's technically who pays you, even though Colton is the one that writes the check, but she's the MCA, so she's in charge of all the money. She has a bunch of different great accountants that she works with. And I know I'm literally working with one of them that she sent. So she has a lot of good ones. So if you're like, I have no idea where to go, ask some agents in the office, who do you use? Can you get me in touch with them? I know their lives are crazy right now. Come May 15th, they're gonna have nothing to do. So they're gonna love talking to new people like, oh yeah, you just got a business, let me help you do everything. There's two different kinds of accountants in my mind. There's the kind that charge you a lot of money and try to be very involved in your business. And there's the kind that don't charge you hardly anything and don't really help you in anything. I can see the merits in both of them. If you want to go and learn all of the accounting stuff that you can, talk to everyone, do online classes, read books, blah, 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 maybe go with the cheapest one and tell them what to do. If you have no idea what you're doing and you just want to pay good money for a good accountant, go for an expensive one and let them like jump in your business. Either way, with your accountant, don't ask them in December what you should do for your taxes. You should make a plan for the year on how to best use your taxes. So otherwise you're going to be like, oh shoot, I need to buy a laptop or something because I have some money, but not enough taxes. And always save for your taxes. Have I said that like 5 times? Because I mean to. If I haven't, save for your taxes. Here's the roller coaster that agents typically get in. They have a good year and they save 0 for taxes because it's hard to save 20, 30, 40% of your income when you feel poor. But then what's going to happen is because you have not withheld any taxes, come April 15th, you have all of your taxes due. So if you don't have money in your account on April 15th, what do? You don't even know, right? Because everyone's had a job before that always takes taxes. What happens is you have to extend and you pay money as much as you can on April 15th, because you're supposed to pay no matter what, like whether your taxes are done, you extend or anything, you have to pay how much you owe on April 15th.
This year they extended.
Yeah, so this year it's May 15th, 17th, something like that. But so then if you don't have enough money, you have to pay interest on technically what you owe the government. And then when you finally do pay, you're probably 6 months behind because you should be saving up for your next year. So do you think you save up for your next taxes enough? Probably not, because you just spent it on the last year's taxes. And so it's this never-ending cycle where you hate tax day because you never save any money and you spend it all. So if you have a tax account, by the way, this tax account, the author says that it should be at a different bank that is not very friendly to you. It should be difficult for you to get that money because you want to get it once a year, and that's when you're paying your taxes. Otherwise, you don't ever want to know that it's there.
I don't know if you went over it already, but is there like a certain percentage
I generally just think 30%. But the book everywhere that it was talking says 40%. So it's a lot on how you're doing it. I would double check with your accountant on what he thinks. Then he or she, girls are accountants too. But you can even make quarterly payments to your taxes. So come April 15th, you don't owe any money. Sometimes the government owes you money back. So that's an awesome way to do it. This tax account still works. Yeah. Yeah. And then worst case scenario, you're going to have this tax account that has a bunch of money in it. And April 15th, you have a bonus because you don't have to pay that money. It's like the government writing you a tax, but you already have it in your account. So it's way easier. Or you just don't add as much money in your account the next year because you already have a big chunk in there. So there's a lot of things that you can do if you over plan for taxes. If you under plan for taxes, then you're scrambling to get money from everywhere, trying to get a new loan on your house, your car, your everything, so you can have some cash to pay for it, borrow money from shady people. So we don't want that. Set dates and pay your estimated taxes. This is where they're saying you should pay quarterly, right? If you know you're going to owe 10 grand in taxes, might as well just pay $2,500 every quarter. And then when it comes, you've paid. Prepare for your future. Insurance, savings, investments. This is the smartest thing you could do. Do you guys know what you do if you walk into a listing appointment and you're like, this house is awful. This is the grossest house that I've ever seen. And the seller's like, I know, I just need to get out of it. What do? You buy it. You buy that house. You say, oh, this house would probably sell for 400,000 if it was fixed up, but I think you'd only get 250, 300 right now. Do you know how many people would love to buy that from you? Everyone. So you buy that house. You figure out you need a hard money. You need to go find some rich agent in the office and be like, I need $250,000 right now. I'm buying a house. Like whatever you need to do, partner up with them. Like you get your investments. And so if you can save some money for that, you're going to be better off. Then whether you flip it or sell it yourself or whatever you need to do to make money, like you're the front line. You get all the best investment deals. That's why it's hard to find investments that are on the MLS. Everyone's already gone through them, right? If you're hearing about it on the MLS, it's probably not that good of a deal, especially now. The last thing here that's not on this, but if you're just bad with your money and you need someone that's good with their money to take handle of things, Novally can set you up. We call it the family reunion account, right? So family reunion, every February, they have a class, a conference that's called family reunion. Usually it's somewhere across the country. If it's in person, it's going to be in Orlando. So it costs $750 to go, plus your flight, plus your food, plus your hotel, plus your fun, because you're going to Orlando, so you have to do something fun. So it ends up costing like $2 to $3 grand to go to family reunion. It's been nice because it's been digital, so no one spent money. Everyone gets to go. It's like $750, I can do that. So they set up this account. So out of every transaction, they can just save a certain percentage or a fixed amount, no matter what. And it goes into a separate account that's here at the brokerage. And then if you want that money, you have to say, Novally, can I have some money from my family reunion account? And she will cut you a check and then you'll walk to the bank and deposit it. It is not an easy thing. If that's what it takes to get you to save for taxes or your dues or whatever, do that. It's really easy to set up, or even investments, right? If you put 10% of every closing into an investment account, after a handful of closings, you'd have enough money to buy a rental. And you guys are mostly new enough that you wouldn't realize how much money you should be getting when you close a deal, right? You would trick yourself to say that you're not making enough money and learn to spend that much money or close more deals out of necessity. And then you would have all of this money for investing. And then all of a sudden you have rental income and business income from your real estate, and you're just way better off than anything. So That's how I would do it if I was starting. Okay, what questions about money do you guys have? Good. I feel like we had good questions. There's probably lots.
What's the coolest thing your wife bought you recently?
She bought me that. I'm like, never really anything good. It's always like you need clothes or like here's some shoes. We just built a deck in our backyard that has a slide off of it. She forced me to do that.
So in the first year selling homes, what's the biggest monetary lesson?
So the biggest monetary lesson I've had. Ooh, that's a good question. Probably the best one, and there's not a specific house or anything that I'm thinking about, but I thought I had to do everything alone. Like I didn't realize like how easy it would be to partner on things. So for example, I was like, I want to get a rental property. I'm in real estate. When I sell a house, I get 3%. A conventional loan is 5%. FHA loan is 3.5%. That means if I get an FHA loan, I need to come up with 0.5% of that purchase price to buy a house FHA. Like I need a rental property. So I was like, I'm going to go buy a little duplex. Well, I found a not duplex, but that had 2 kitchens. So non-conforming. It was a bad investment, but I thought it was great and it made money. So I guess it's a good investment. But then so I took that and moved out of that after a year because you have to live there for a year, right? That's what your loan says. And I bought a actual duplex and lived there. And so we lived there, but I was doing this all on my own, trying to gather properties. And rather than what I've done now is I've taken my money and Johnny and Clay's and our lender, he's our other partner, our 4, we have pooled together our properties and our money and we buy rentals together. And that has gone way bigger, way faster than any of us doing it alone. Yeah. Yes, hide that money from yourself.
Okay. But the other 3 could definitely be
In the same bank, yeah.
Would you suggest a bank versus a credit union?
I don't know. I go back and forth. I actually have like my savings accounts are on an online bank. My checking accounts are all in just a credit union. But I don't really see a difference. Like, I don't know. They don't treat me better. I don't have any better fees. I feel like things are trying to get more normal. Some people have very strong opinions, like you have to go credit unions or you have to go bank. Really, I just think it's ease, right? If you can snap a picture of your check, deposit it, direct deposit, I'm not going to deal with the bank most of the time. So yeah, I like credit unions, but I don't really have a reason for that.
So, I mean, this more like on the investment plan. You guys do much like out of state investment?
We haven't yet. I'm debating though, because there's not a lot of good stuff here in Utah left.
Like as far as cash flow, like it's
Oh, it's hard.
like, that's why I asked like where you guys are. Like,
Yeah,
it's like I've looked into doing it in Utah, but it's like super hard.
so hard.
Cash flow properties.
Yeah, our latest, so we're actually building 6 properties right now. And they are going to cash flow, but it's like we had an in with the lots and got those for super cheap. And then we found the builder and he's building them for us. So like when we're said and done, we could sell them for more money like a normal builder would do, but we're keeping them, or at least that's the thought right now. So that's how we're looking to make money right now, but it's hard to find stuff. But yeah, get creative. There's got to be people that are desperate out there somewhere. Okay, well, if you guys have questions ever, come find me. My office is that very corner, up 2 floors. And like if you look at the door and it says Clay Winder, you're right next to my office. I'm with a bunch of other people though. Cameron Wilson. Yeah, let me. There you go. Yeah, come ask questions. Happy to help whenever. But before we end, I want to hear your guys' biggest ahas and takeaways. What are things that you're going to actually go and do? Make a budget. How about live a budget? Can I make it even one step harder? Yeah, that's what I feel like I need to do. Yeah.
No question.
Yeah.
So say 1099, you don't have 2 years tax return, so I can team up with someone to do investment properties like you were saying.
Uh-huh.
And they can, I mean, does that make a difference for them? Like, does your name, like teaming up, does your name go on?
Yeah, so we have, let's see, we just counted the other day. We have 16 doors and I have 3 mortgages, so 4 doors that are in my name.
Okay.
And so I only bought one of those houses though. The others were owned by someone else, but then I was in a better position to get a mortgage in my name. So we sold it to me.
Right. So it wouldn't be a good position for like someone teaming up.
Well, I don't know. It depends on, I see investments as you get 3 different things, right? Someone is bringing money, someone's bringing the deal, and someone has the mortgage unless there's enough money. And I think all 3 of those have value because you need enough money to buy the house. And so if you don't have all of the cash, you need a mortgage. So that adds some value.
So yeah, I guess that's just the value.
Yeah, if you bring a house and someone can qualify, I'm pretty sure that they'd partner with you. If they're nice.
Well, I mean, I like all the podcasts people I've like listened to talking about real estate investing. Saying like, if you don't have the money, you can dedicate the time and like find a way, find somebody who has the money, has the resources, like find a way to split it that they're happy and you're happy.
Mm-hmm. Or even just like, think about this, right? I had this business idea the other day. I don't know where it will ever go, but instead of collecting a 3% commission, imagine that you owned 3% of every home that you help people buy, right? You're like, you know what? I'll cover 3% of your down payment, but I own 3% of the house. Like, how much money could you make? Again, this market's ridiculous. Home prices go way up. You have 3% of like 100 different homes. You would be well off. I don't think that would ever be a thing, but it sounds way better for someone. Yeah. Yeah, well, that's where I got my idea, right? You have these like hedge fund managers and stuff that take a small percentage of whatever money you put in there. I'm like, I want to do that with real estate. I own 3% of every property I sell. I don't know how it would ever work out, but I thought that would be like a cool idea, right? Do it with rentals or something. You bring an investor a deal, you're keeping a small percentage, then you just go as wide as you possibly can with it. So who knows? Maybe that will be the thing in the future. You heard it here first. Trademark. Yeah.
I really appreciate the detail with which you explain and go into what you're talking about, because with all the classes we have, there's so much, and just like we hear it all the time, it's like a fire hose.
Mm-hmm.
So to put down as many notes as I have with everything that you're speaking of. And I know that you're reading these books, and that you're applying this, so it really makes a difference.
Thanks. Favorite student. See, told you. Told you.
And his favorite on my campus, Cool Ranch Doritos.
Yeah.
Or go buy it.
That's the database class. I always talk about that. Okay, so the biggest takeaway that I hope that you got from today, I only mentioned it one time, but you need to call people to make money, right? That's the takeaway. If you don't have any money, you can't be a good manager of money. So call the people, make the sales, and then you'll have all of the money. And then hopefully you can implement all of this correctly. If not, come find me, we can talk more. But you have to make sales, so call people. Okay, thanks guys. What else you got, Shoni?
That was money, right? That was great. Thanks so much, Cameron. What was that? I've been waiting to use it all day. Like, I can't wait to get down there and say that. Cool. Awesome, guys. Really quick, I'm curious, what did you learn today about money that might be different from beliefs you've had in the past? Yeah.
Our vision and our why, we work backwards from that part of it, but I've never thought of like halfway.
Really reverse engineering your finances. That's great. Mhm.
We're out there, we're knocking doors, we're calling people, and we're doing fine. But if we're blow it all, not save up for taxes. Looking at the beginning with the end in mind. Money is really where the end is. We're not focusing on that. So easy to get swept down and this.
Anything else? Cool. Awesome. So like Cameron mentioned, the biggest key, right, is where it all starts is with lead generation. Like at the end of the day, if you don't have leads and people that you're connecting with and helping them move down the process, then this conversation is kind of irrelevant, right? And so that's the focus for the next hour to hour and a half, is getting our daily 410 accomplished, right? So part of that is, for those who are new, is making 10 connections a day. Connections is a two-way conversation. So that's somebody responding to you through text, somebody answering the phone call, somebody messaging you back on Facebook Messenger. So it's an actually two-way conversation with somebody in your database. The second piece is 10 contacts added to your database. So you want to find more people to put into your. Do that initially is looking through your Instagram, through your Facebook, and finding who you can pull into your database. Who do you want to contact and get their phone number because you don't have it yet, and grab their email that you don't yet have. Okay, so you want to add people consistently to your database. And then the third one is you want to send handwritten notes to those who you talk to. So everybody you have a conversation with today, the goal is to write them a note of, sharing something simple, some piece of gratitude, acknowledging that you're grateful that you're able to connect with them. Okay. So, and that's really one of the key separating factors that's going to help you stand out in this industry, is you going the distance, right? Taking that extra step is going to make sure that you're solidified in that person's mind. Okay. So if they have a phone call with you and then a week and a half later, they get a little piece of mail from you in the mailbox, it's going to stand out in their mind. Okay. And then the fourth one is previewing homes. So actually getting out there and seeing homes in the market, seeing what they're priced for, so that way you can stay a market expert. Okay. So for this session, we're going to start with just contacts. That's where it all begins. So making the calls, making the connections, and really moving forward with your weekly goal. Do you have a question, Stetson? No. Okay, cool. Awesome. Great. Any questions? Sweet. We'll stay down here and we'll start getting after it. I'll be here if you guys have questions. You want me to help chime in on a situation, and let's just start doing it. Let's hear it.